The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Our guest today will be the Wolf man himself, Shane Smolian, thewolftrader.com. Tomorrow we will have Stan Harley, and Friday we will have Tim Bost. On Monday, we'll have Norman Winsky. On Tuesday, we'll have Jim Bartolioni. So we got a nice group of people coming up here shortly, so that'll be fun to listen to what they have to say. Now, today, folks, I posted a chart of the euro. This is a monthly chart. I look at monthly charts about twice a year. Well, a little more than that. But we've been watching this as a potential area for major support coming in here to the euro. As you can see here, that number is right at par. Now, I have a much longer term chart here that I wanted to, oh shucks, what is this? Hold on just a second here. Hey BT, I'm doing a radio show. I'll call you later, okay? Sorry, pal, bye. That's my friend Byron. I don't get to talk to him too much. He's over in Timbuktu doing some type of a deal with construction equipment with some Japanese investors. Hold on here just a second. I want to get up get this long-term euro chart if I can find it. Oh dear. Shucks. Anyway, it goes back to 2000 when the euro was trading at 84, and it went from 84 up to 106, 160, and then right now looks like we're going to be at par here again pretty soon. So we're watching it very, very closely. Now, what I wanted to do is I wanted to share with you a chart from one of our listeners and good friends over in the UK, Mr. MC, and he did a great deal of work here on this euro, and I think we really need to look at it because what it does is it really shows the things that we talk about here at Trade What You See and TFNN. You'll notice here, this is the long-term chart. As you can see here, we are looking for this beautiful ABCD pattern completing and stuff, and it looks like it's coming in sometime in the middle of July. So let's take a note of that. We'll be watching it. We watch the patterns and the time together, but it shows the incredible harmony. You can see the 135 pattern that was there, and that's really a great pattern to trade, folks. As most of you know, I was very, very emotionally upset yesterday because I missed that $12,000 move in crude oil yesterday, and I wanted to go over that just a little bit to show you what happens, when you're not mentally prepared, to do this. I mean, if you remember from Roy Longstreet's book, golly gee, got it right up here. Where is it? Anyway, Roy Longstreet's book. Oh dear, I can't remember the name of it. I'll think of it in just a second. Somebody will remind me shortly here. But one of the things you do is the first mistake teaches, the second mistake kills. Okay, now one of the things that we were looking at yesterday, and I wanted to bring this to your attention again. Hold on one second. We'll get this chart up. Of course, everything I do here is related to charts. Hopefully you'll like those, but this is the mental part that we have to fight all the time. You'll notice here we had the beautiful ABCD up here right at the 111 area. Then you'll notice that the market started down. I drew this in yesterday as it was happening. I think the low was at 103 at that time, but you can see that 135 pattern forming. Each of those corrections were exactly 38%. Now, it was a shorter term chart because, you were looking at a chart that was I believe it was a 60-minute chart. So what you had was it would rally for 3 hours to the 382, and then boom, down it would go in the 135 pattern. Now, the one thing that Marcus was trying to show us on that previous chart on the euro is how the markets repeat over and over again. And that's what this repetition is all about. So what happened today, boys and girls? And if you like charts, you're going to like this one here. So this next one here is a 15-minute chart. It's not the hourly, but it's a 15 minutes, of course, because we've got the market moving a lot faster. So you want to go down to a smaller time frame, keep your risk small, and there right in front of you is nothing more than that same pattern again. Beautiful 135 pattern. The last little high there, right there, number 3, that was a 382, and it's dropped over $5,000 here in the last hour, so a little hour and a half. So it's these patterns repeat over and over again. Do they work all the time? Of course not. Nothing works all the time. And so you've got to remember to protect yourself. They're very good at predicting, okay, within limits, but they're very, very good for risk control, because if the market would have gotten above that downsloping line right up here, that would have been certainly a failed trade, and you have to move on to the next one. And so that's the main thing to pay close attention to. Now I need to do just a tiny bit of thing here, because we have a position on, I think we have, at least we did a little while ago. Well, we're out of the corn, folks. It had a chance. It just dropped another 20 cents here in the last hour, and so we took a loss on that trade. We got up all the way to 586 this morning, and we bought it at 579. It had about a 9-cent profit in it, and at that point, I would highly recommend putting in a break-even stop or something like that. But these markets are just absolutely ruthless to these grains. When they do turn, if they do, and maybe they will this year, maybe they go to zero, I don't know, but that was one that you absolutely had to do. You were setting at a beautiful 78% level. You were setting at a giant ABCD, just absolutely perfect. It worked for a tiny bit and then failed, so you just move on to the next one, and that's all you really can do. So what we're going to do now is we're going to go across the pond over here and go over to Germany, and we're going to take a look here at the German DAX, because many of these stock markets are under a great deal of pressure. And of course, we have the Fed today, and the Fed today is probably, they're really between a rock and a hard place, folks. They really have it difficult, but that's neither here nor there. Anyway, you'll see here that we're looking at the same type of thing, a nice little ABCD pattern, looking like it's ready to go down. They had a nice little counter trend rally today. That's all it was. Very strong downtrend, as you can see here. It's been going down for quite some time. So that's an interesting one to watch. And then, of course, I watched a little bit of Bloomberg today when they're barbecuing Boris Johnson over there. My goodness, they act like children over there in Parliament, but that's what they look like in the Capitol sometimes. So nothing's any difference. And you'll see here that the FTSE, even though it's been a little bit stronger, we still have a downtrend. And we had this big ABCD down here yesterday. We had a nice little bounce so far today, much like we did here in the United States. But these stocks are, they're under a great deal of pressure, folks. Now, those of you that listened to the show yesterday, I brought something to your attention that I thought was extremely, extremely important to look at. And I'm going to show you as soon as we come back from the break. I'm going to post it, and then we're going to talk about it, because it's the largest open interest of any of the commodities that we look at, and that is the Treasury notes. And I'll get this up here for just a second, and we'll take a break. 877-927-6648.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
The chart of this, the Treasury notes, the 10-year notes, you can see over the last several weeks here, we made a perfect ABCD up there. You can see the exact target price. But what I want to do now is move over to a weekly chart, because if you remember several weeks ago, the whole world was falling apart because interest rates were skyrocketing. And then right at the very bottom, of course, we came up with a perfect pattern to show you here. Just 1 second here. This is a weekly too, folks. So what's interesting about this, as you see this, you'll notice here that the target right there at that 120, okay, that was spot on. Well, we don't trade the notes very often, but if you're looking at the bonds hit the 142. Now, we went from 131 to 142 in 2 weeks in a very, very negative environment. Remember how the Fed was going to raise 75 basis points and all this kind of stuff? Well, that's always good news, fake news, whatever it happens to be. But we did hit 142.06 today in the Treasury bonds. We've already broken 2 points, which is $2,000. And so it's probably made some type of a significant top up in here today. So keep an eye on that one. That's going to be one that's very, very interesting. And of course, the other one that we've been watching very, very closely, and that is the gold market. I'll get this up here to talk about gold, because I spent a great deal of time yesterday talking about the relationships of the dollar to the gold. When the dollar is really, really strong, it's difficult for the gold to be weak, to be strong, and it's weak, as you can see here. Now, we've been very bearish gold for quite some time, and the last time we put our short on was at 18.12. We're now trading $80 under that at 17.32. I just saw. Once we broke through 17.65 yesterday, folks, that told us that 786 had failed, and now we're starting to go. We're seeing a massive decrease in many commodities, folks. I'm talking about gasoline, heating oil, lumber, corn, wheat, beans, coffee, cocoa, sugar. All of them are coming down cotton, all of them are coming down very, very sharply. Is this the top of the bubble for the supply side? I don't know. All I know is that we're having some major corrections. Here we are on the 6th day of July, right in the middle of the growing season, and we have, our December corn has just broken below the 78% level that we had at 571. It rallied 14 cents off of that up to 786, and then is broken down again. There's just more selling. Whether it's related to funds or not, I don't know, folks. It's just selling, but you've got to pay attention to it. That's really what you have to do. At least I think so. I don't follow the fundamentals at all. I do talk to Rich Anderson almost on a daily basis, and Rich tells me that the weather is not that good for growing, but the market still collapses. Now, there's either a big disconnect here between what they're telling us and what's going on in the real world. That's where it pays to be a chartist. It don't make no difference, boys and girls, as they say in Terre Indiana. If prices are going down, there's more selling. If prices are going up, there's more buying. That's about as near as you can get. Nothing else you can do about that. So pay attention to it, folks. Regarding the stock market, we're having these pretty big swings here. We have the Fed in here today, and whether they're going to hold it up or not, I'm not sure. But the main thing is that, we made that major bottom back there on the 24th. And from that time frame, 24th of June, and since that time frame, we've had a nice rally. We're in 3 weeks of a rally, but it really hasn't gone very far. All the NASDAQ has been able to do is to go up and make the 382 retracement, which it did again today and then gave up the ghost. So these markets are not acting very, very bullish. And as Jeff Huge pointed out yesterday, holy moly, guacamole. I mean, there's a lot of things that telling you that, you could be looking at something, totally serious in here, and you don't want to, to look at it. Just to give you a review yesterday, just to show you how negative it is. And maybe that's a reason to buy it. I don't see that, but let's just get up here and take a look. This is one of the charts from Jeff yesterday. You see, there's the advanced decline line that Jeff is looking at. And you can see these markets are just getting hit really, really badly. And of course, the NASDAQ is getting hit hard along with everything else. But, all I'm doing is I'm waiting for a pattern that say, hey, look, this is a relatively low risk place to get short. And that's what I'm basically watching to see it. We had a hell of a run in that thing from the 5th of May when we were looking at that major astrological aspect up there on May 5th, all the way into the bottom that occurred, which was a perfect ABCD in the S&P, the NASDAQ, the Russell, any of them that you looked at. They were all just basically spot on perfect. So that's why we've got to follow them, because they'll give you a pretty good idea of what we're looking at. Now let's go back talking about perfection, because here's where you get mixed up. And I believe me, I'm the first one to talk about when I make mistakes, because that's my easiest part to talk about. You'll get up here and take a look at the dollar index. It looked like, this is a weekly, it looked like we had a perfect ABCD up there at that 105 and change level. Well, the problem was in the euro. The euro was acting like it wanted to have a little bit of a rally. That's what it looked like. And I want to go through this again, because this is how you learn from your mistakes. And you come up here and you'll be able to see here, I'm looking at that, and I'm looking at this pattern right here, and it looked like a beautiful Gartley there at 104. But boy, folks, below, if you're more than 30 pips lower on that, you're below the 78% level, and that thing was absolutely very, very dangerous. And two reasons for the danger is you'll notice on the downtrend, all of these rallies have been 382 retracements, okay? And now what you're doing, you're setting right at the 61% retracement there at 104, and close, we broke 102 today, so that's down $2,000 from where we were just yesterday. So how do you expect gold to go up when you got the U.S. dollar soaring to the upside way above 107, okay, and the euro breaking, 102? It's just not going to happen, especially when the chart pattern on the gold says it's got a high probability of breaking 1,700. And, 1,600 at 1595 is the actual ABCD pattern on the gold. And silver, silver gave up the ghost also. It was supposed to hold at 1930, and it's trading below 19 now. So these markets are, they're very dangerous if you don't protect yourself. And so try to use those patterns for your protection and also for when you want to get into these things, because they don't always work, but they'll work more times than not. And when they do, they work pretty good. We've got a good guest coming up here again. Haven't heard him for a long time. Shane Smolian, thewolftrader.com, will be up at the break here. He's always got some really good information for us. And so he'll be joining us today. Tomorrow will be Stan Harley of the Harley Stock Market Letter. And then on Friday, we'll have Tim Boss, Financial Cycles Weekly out of Bradenton, Florida, and another award-winning market timer, along with Steve Rhodes and Stan Harley and all the others that we've had in here as guests today. So we'll be right back with the Wolf Trader himself, Shane Smolian, just a few minutes.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have the Wolf Trader himself on the line. Shane, how are you doing?
Good morning. Is this Duke and Duke?
This is it. This is Duke and Duke, Billy Ray Valentine, in the flesh, Capricorn. It's been a long time since we've chatted, my friend. Are you still as bullish as you've always been?
Bullish on the inverse ETFs, let's just say.
You're going to have to change your moniker to Bearman instead of Wolfman. So go ahead. Tell us what you're looking at, my friend.
Yeah, okay, S&P 500. The S&P 500 is in an interesting place right now because the Fed has actually started quantitative tightening, and they actually did. They actually started to sell off treasuries. I was kind of surprised. Now they're just dipping their toe in the water. They did 25 million. That's like nothing, because they deal in billions. but that is something. So we're going to start out here with the S&P 500, and I do want to start with one of our new forecasting tools, which is the geomagnetic storms. This has been really, really good. Now, I posted a webinar about this, about how these storms affect markets. This research was actually published by the Fed, believe it or not.
Yes, I remember you told us that they do quite a bit of that, and people don't know this, but they have several astrophysicists on the payroll, believe it or not.
Because this stuff works, is absolutely. So what we are actually in the middle of a geomagnetic storm right now. Now, this is a small one. It's called a G1. When this KP index gets up to 5, it becomes a G1. That's enough to knock the market down. So I'm going to show you another slide here. I know there's a lot going on here with the slide, but this blue line here, this is what's going on with the Fed. These are the internals. And so these orange arrows here, these point to geomagnetic storms. And every time this has come to the market, it has knocked it down. Now, the one up here at the top in the March rally, this was a big one. This was like a 3. So this one up here was really knocked the S&P off of its rally and sent this tumbling lower. This was one of the major factors that contributed to that. Now, there's been other small ones here. This was the Fed meeting here. Right after that, it kind of knocks the market out for about a week. There was another one here at this recent peak. It's knocked it out for a week. And then now there's another one today. I think this is significant because of a few things. The first one, if you look down here, this is the Bollinger Band width, which looks at volatility. So I like this a lot better than the VIX because it measures volatility both ways. So each time this gets up to a peak here, when this starts rallying, essentially what that means is that the move is likely to persist. When this starts to fall, the move starts to go sideways and gets choppy. So you can see that here. What I'm looking at here is that this volatility has now come down to this trend line here. So it's at a low. And so what that means is that once this volatility starts picking up again, we're likely to get a stronger move in the S&P. I think that move is going to be to the downside, and I think that this storm right here that we're looking at right now is marking some type of a high here. So this is actually a really timely session that we're having today. The Fed has been trying with the internals to try to keep this off the bottom, but I think now that quantitative tightening has started, and it's really happening. They're actually doing it. They talked about it and talked about it and talked about it, and then they dipped their toe in the pool with 25 million. But they're actually doing it. This is going to have a really, really adverse effect on equities. So I like to focus on the Fed. This has never let me down since 2009. We are in the worst of the worst right now in terms of financial conditions for this S&P. So I would just put that out there to everybody that, with this volatility sitting at the low right now, this is like the eye of the storm right now. It's kind of calm. It's like everything looks kind of peaceful. The volatility is likely to pick up very quickly here, so be on the lookout for that. This is a graph here. This is from the newsletter. I just kind of zoomed in here. This is the Optimized Bradley. The Optimized Bradley is making a high today, and what I want to point out is that the forecast conditions, astrological cycles, all this stuff gets worse and worse and worse heading into August. August is a really bad month in terms of cycles. We've seen a few months where the cycles have all kind of lined up. We saw that last January. August is looking pretty bad. So I expect the conditions to get worse and worse and worse as we get through the second half of July. I expect conditions to really go downhill. The beginning of July here, we're still kind of floating around here at this peak, but I think things are going to go downhill quickly as we get into August here. So I know some people are looking at it saying, well, how can it get any worse? Believe me, it can get a lot worse than it is now. I think this is just the warm up in terms of what's about to come here. This is another graph here showing what I call the poop slinging rallies. These are the failed bear market rallies. So every time the S&P has tried to come up here, it's come up to these Fibonacci speed lines. It's just rejected every single time off of these. So none of these rallies have survived. Even this one here, and going back into late May, retraced very quickly here. And then once again, the gap filled. There was a gap here. I wasn't sure if it was going to make it back. It did make it back, but now we're kind of on the way down again. And then we can confirm, even though it's a small amount, that the Fed has begun quantitative tightening. They posted it as a sale on their site. So this stuff is happening. and we can't ignore it, guys. We cannot ignore the Fed. And like I said, this is, of all of the tools that I use, the Fed is the most reliable of anything that I've used since 2009. It has never let me down on a long-term basis. Short-term gets a little bit choppy, but longer-term, as long as the Fed is doing this and we're in this really, really tight tightening phase, I expect lower prices from here. There's just the market has never shown an ability to rally without the Fed. And I don't think this is any different, especially now that we're dealing with all of this inflation, and now we're likely, according to the Atlanta Fed, we're likely in a recession. Now we have 2 negative quarters of negative GDP. And Larry, as you pointed out, all of these commodities are decreasing like rapidly. So, that's probably discounting ahead of a recession here. So, just something to think about for everybody. Strangely, I think that the inflation can remain higher. I'm looking at a few aspects going into 2023. Because there's so many other factors going on with the Ukraine situation, and that we saw with the stimulus, and that could come back again if we come into recession. There could be some strange things that could just keep that inflation number too high for the Fed. And I think people need to understand the Fed's just not going to just turn on the printing press. I mean, people say that all the time. Oh, well, in 2 months, they're just going to turn it on. Well, that's not how it works. I mean, they have to get this inflation under control, and getting it down to 5 or 6% is not acceptable. They're not going to start QE again during inflation. Even if it gets down to 5%, that's not going to happen. So until they reverse policy, I can't see this S&P changing its fate right now. Now, there are some stocks and ETFs I want to talk about too. One of them here is the VIX. This is another one that's a worrisome sign if you're bullish, because this is very low right now. The VIX volatility is sitting right on its belly right now. And this volatility of the VIX, the volatility in terms of the Bollinger Band of the VIX is low too. So this is signaling that the VIX is ready to start moving higher again. So we're likely sitting right at some type of a market high right now. And this VIX is poised to take off. And we can't have any type of a significant low until this VIX really starts to show some fear out there. And even with Bitcoin, like, people are still complacent about it. They're still, hey, a lot of forecasters are calling for a decline. It's going to go down, and then it's going to go right back up to 500,000 or a million. And I got to tell you something, until the prospect of, Bitcoin investors come face to face with the prospect of Bitcoin going to zero, or the fear of that, Bitcoin's not going to have a low anytime soon.
Wow, really great stuff. We'll be right back, folks, with Wolf Trader Shane Smolian in just a minute. I have a question for you when we come back to Shane.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're speaking with Shane Smolian, the Wolf Trader. Shane, I have a question, and that is there a possibility that the Fed has lost control? In other words, all this quantitative easing and helicopter stuff that's been going on for the last 15, 16 years, it may be the rest of the world said, hey, we've had enough, and the U.S. dollar...
Well, that's a good question. I mean, if I saw them going at full strength and the market was going down, then I would say yes. But the problem is that this is an inflation argument that, when they did the stimulus, they stepped over the firewall, which was the consumer. And I've talked about this before. If you look at those consumer interest rates, and they used to track the LIBOR, right? And they used to be really, really tight, okay? And so when the LIBOR started diving, when this all started diving in 2008, I had all these credit lines, and they all started dropping from I had 9% rate. They all started dropping down to 3%, 4%, and then all of a sudden they just readjusted everything back up to 10%. Well, guess what? Interest rates went to zero, and they're still charging now 20 to 25% on the consumer. So that's that was their firewall for inflation right there. Okay, so that was it. They didn't. So QE never made it over. If they kept tracking those rates like they did before, then credit cards would have been 4%, 5%. That's what they should have been. But they kept it up at 20 to 25% because they knew that if that QE spilled over to the consumer, that was going to cause wildfire. Well, guess what? Here comes the stimulus. Here comes the PPP, steps over the firewall, send the check to the consumers, and that ruined the Fed's plan because the Fed had this under control in terms of the QE. It wasn't spilling over with the inflation. Now here comes the stimulus, and it ruined their plan. So I think what you see here is that, when those checks went out, that completely, it kind of conflated everything, and that's not the Fed that caused this. Okay, it was the stimulus. So I don't think they've lost control yet, but the perception is not good. It's not good optics for the Fed. I guess hopefully that answers the question. But I'd like for me to say that they've lost control. I will need to see them at full strength, and the market's not responding, and we don't see that. They are pulling back, so they are kind of causing this. But in terms of the inflation, that's what happened. They crossed over that firewall. And so I don't think the Fed was very happy about that because that was mainly driven by the stimulus. More so, I mean, this is a complex thing. There's the wars going on, there's supply chains, there's all this stuff happening. But that was really a big driver when they started cutting those checks and the stimulus and the PP, all that stuff, that really poured gasoline on the fire. And a lot of this stuff can't come down, like the rents and the home prices. That stuff sticks, and it's hard for that stuff to come down. And so that puts the Fed in a bad situation for sure because they weren't responsible for part of that. Hopefully that answers.
That's a great description, but great answer. Thank you very much. Continue, please.
So I guess to answer your question, if I see them at full strength and the market's falling, I would say yes, but they're not at full strength. So I can't really answer that question. I don't think they have, but anyway, okay. So gold. So I've been talking about gold for a while. I saying that I expect this decline to be happening, this multi-year decline. I do expect gold to be coming down to 950 to 1100 in the next few years. And one of the reasons is that I talked about there's this big divergence forming going back to 2008. It's right around 1100 that I think that we will see this gold will kind of come back and settle down to this price. The time frame that occurs, it could be anywhere from 2024 to 2026, somewhere into here. But I do think gold's on the way down. Now, some people have pointed out, I own gold in the British pound and I own gold in the Japanese yen, and it's doing great. Let me point something out to you. You're essentially doing a currency trade, okay? You're essentially long the dollar if that's what you're doing. It has nothing to do with gold. It has to do with the fact, Larry, you pointed this out, that when the dollar goes up, a lot of these other currencies fall, particularly the euro, and that's holding up gold in terms of when it's priced in other currencies. So I just want to point that out to people, that you're essentially doing a currency trade if you're long gold in another currency because the dollar is getting so strong. Now, there were some long-term cycles that we talked about with gold. I did some webinars on this. I do expect gold to be coming down. This is the Jupiter cycle coming down into 2025. So this is another look at it from a different angle. And like I said, on the way up, everyone thinks this gold is just their friendly helper. On the way down, it's Cujo. It's just wild animal. I think that likely gold is going to be coming down here for at least the next 3 years, could be more. There's another cycle that I'm looking at here, which was a Saturn cycle that also shows gold going down to 2029 even. So just something to think about. Now, on a local level here with gold is entering the most bullish part of the year, okay, in terms of the annual cycle. I have this on the chart here. So if gold doesn't go now, guys, it's going to crash with the S&P and Bitcoin. They're all going to go down together. So this is the solar cycle here. Gold should be rallying here, guys, in the next month or two. And so this is do or die, guys. Gold has to get off its bottom here and make a rally, or it's going to be big problems here, because once we get to this solar cycle high here, if gold is still falling at this point, I think it's likely to accelerate even faster to the downside in a triple trade with Bitcoin and the S&P. And that's what it did in COVID, guys. So I'm just pointing something out here. These three, gold, Bitcoin, and S&P, they all went down together during COVID. I think that's likely to happen. Again, here's the solar cycle. We're right at the low. We're actually about a week into this now, but gold is supposed to be going up now, guys. So what I want everybody to do is pay attention to gold in the next couple of months, because if in the next 6 weeks gold doesn't rally, there's going to be big problems here, because this is the most bullish time of the year. It needs to get going here. So I'm not going to say that it's dead yet, but it needs to start showing something very quickly here, or likely it's heading lower.
Wow. Okay, pay attention, folks, because he's certainly been right about stocks. You want to continue, please?
Sure. Well, I'll talk about Bitcoin now. So Bitcoin, this is the big one. I've really learned a lot about Bitcoin in the last year. We have many models on it. Bitcoin is tracking the S&P very nicely now. Now, what I have here on this graph, I have two symbols here. I have S&P up here, and I have Bitcoin below it. And so the S&P's here, and the S&P's been a lot more choppy here. You can see it's been heading lower, but Bitcoin has been much, much smoother in its path lower here. You can see that it's essentially been, it's the same path, but it's without all the choppiness. But what I want people to focus on down here is this is a correlation coefficient down here. So when it's above this line, it's positive. When it's below this line, it's negative. A positive correlation just means that these two are tracking each other very well. So when this line gets above zero here like this, that means that they're going down together. So I think one of the big problems here, and to go back to your point, Larry, the Fed does not have control over Bitcoin, and Bitcoin trades over the weekends. And we've seen Bitcoin on the weekends have these crashes over the weekend. And so that's a problem. And I don't think the Fed has any interest in rescuing Bitcoin, to be honest with you. It's a competing currency. Everybody knows this. So if Bitcoin crashes, which I think it will continue to do so, I think it's going to take the S&P. So this is something else that is, so when we say loss of control, I would say there's factors outside of their control. First one was being stimulus, and the second one here being the fact that Bitcoin could take the whole thing down.
Wow. Stay with us, folks. We got another segment coming up. Shane Smolian, thewolftrader.com.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, we're back, folks. Speaking with Shane Smolian, thewolftrader.com. You want to tell us what's on the agenda for your next webinar? And how the folks can reach you. Let's tell us.
Sure. Well, we did a webinar on trading design, trading system design flaws, because I'm doing the automated trading. We do the auto trading with the brokerage. And so I was kind of just going through how we design these trading systems and some errors that you can look for. So I think we'll be still talking about that this weekend coming up. But if someone wants to get in touch with me, you can reach us at wolftraderfutures.com. So it's wolftrader and then the word futures.com, or www.fedjuice.com. And then Shane at wolftraderfutures.com. If you guys need to get in contact with me, you can just reach me there at any time. So we do have the webinars every Saturday at 1 o'clock. It's on YouTube, and the YouTube channel is going to be Wolf Trader Futures. So if you guys need to get in contact with me, feel free to reach out. Even on the website, I have a chat app that I can chat with you guys if you have any questions.
Well, that's great. Listen, it's really fun having you on. We'll have you on again in a few weeks, but I'm really happy for your success with the your automated trading program that you've got working. So please keep that going. Let the folks know what's happening and stuff. So thanks for being our guest. We'll have you on in a few weeks. Would that be good?
Absolutely. Thanks so much, Larry.
It's our pleasure. Shane Smolian, stand-up guy. We'll be having him on again in a few weeks, and we'll see you folks on the flip side tomorrow. It's a little early. I got another 30 seconds to go. We have 2 calls waiting. Unfortunately, we'll not be able to take those because there's not enough time. Maybe they could call in tomorrow. That would be good to do. So let's remind ourselves that you can call in anytime and get these things answered if we can answer them. So we'll see you on the flip side tomorrow. Remember, tomorrow will be Stan Harley, the Harley Stock Market Letter. And I think you'll enjoy his work, because he's an award winner and he's a professional trader. So we'll be seeing you tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.